Okay, September 7th, Alden Guajardo with Mobile Mailbox Money. Today we're going to be comparing a residential purchase and long-term rental strategy to a mobile mailbox money strategy. These homes are both in Tempe, across the street from each other. So let's get into it a little bit. So this home's a $300,000 residential purchase. It's got dinged up cabinets. The home's clean. Definitely a clean product. Not a bad area. With average Maricopa County rental rates right now at $2,000 a month. So let's jump into the numbers a little bit here. With a $300,000 purchase price, garnishing a 20% down payment or more, depending on what kind of financing you are getting. Historically, if you are using a hard money lender and a flip loan, they're going to want 20-30% down payment depending on your relationship. That relationship comes at a cost as well. Monthly payments are around 8% as an annualized interest rate for a fix and flip loan or more. Definitely, since rates went up last week, today's September 7th, 2023, made cash flow a hard thing to acquire. So as a long-term rental strategy, if you were to acquire a $300,000 home, right here, a 3-bed, 2-bath, it's in Tempe, 1,100 square feet, garnishing at a 20% down payment, just call it 20% for rule of thumb, you'll be carrying at least a $270,000 loan with a $60,000 down payment out of pocket at an 8% rate, probably more. People are going to be in the comments possibly saying, hey man, they're more, depending on what lender you're using, could be more. $60,000 out of pocket, $20,000 for incidentals, because if there's any electrical problems, plumbing problems, you need a paint, things of that nature to get it to a turnkey availability for a either long-term rental strategy or an Airbnb program. Really talking about more long-term rental strategy today because that's the more passive program, right? So you're carrying a $270,000 loan at 8% interest. Depending on what type of loan you're receiving, obviously, excluding taxes, insurance, and other maintenance fees, that payment alone is $1,981 a month for a 30-year mortgage. That's if you get a 30-year mortgage. You may have some balloon payment or something due in 2-3 years, or sooner, for all we know. So $1,981, just for rule of thumb, that's a 8% mortgage, 30-year term, principal and interest monthly payment at $1,981. With average Maricopa County rental rates, how does that work out? When you account for maintenance fees, management fees, incidentals, vacancy rates, unless you got the best tenant in the world, you're probably going to deal with some form of vacancy at some point. So that's not a financially savvy decision. You're operating at a net negative potential cash flow program. So unless you're banking in the next couple years on a realized equity position, equity pullout, equity sale, you're really operating at a net negative for the cash flow. And really, it's not the time to bank on equity at this time. We just went through one of the biggest jumps in equity. It's backed off a little bit in recent history, so that's not going to happen anytime soon. Don't have a crystal ball, but that's my thought. So really, $1,981 a month is what your payment is, and an average Maricopa County rental rate's $2,000 a month. Tough. That's a tough decision if you're going into a long-term rental strategy. Let's compare across the street. Check it out. The mobile mailbox money strategy. So really, as an end user client, there's not a whole lot of availability for ownership here in Maricopa County, especially if you're having a tough time qualifying with your current income, or you can't have the specific tax documents that they're needing in order to finance on a third-party lender for a residential purchase as a client, end user buyer. There's plenty of reasons why this may be an option as an end user buyer on the other end to purchase this home on payments, finance that home's purchase, and own that manufactured home at closing. So this is across the street, University and the 101 in a community by the name of Tempe Cascade. It is a little bit lower income of an area, but quality is not of concern. So this 2-bed, 2-bath, double wide is in our inventory. It's listed right now for $65,000. $65,000 is the purchase price. It's on leased land, and lot rent's $850. If someone were to finance this home, they could pay and expect to pay monthly payments virtually the same as market rent. So the comparison goes, why rent when you can own, right? So across the street, you could rent a 3-2. It's a decent house, right? For $2,000 a month and have unrealized equity as an end user buyer, or purchase a manufactured home for $65,000 and have some pride of ownership. The home needs a little bit of work, but that being said, comparable price points for homes like this in a more refurbished condition could go for $99,000. So let's say you go in, fix it up, redo the bathroom here, put in some flooring, paint it, get the Arizona room a little bit better touched up. I mean, it could be about $10,000 in remodel, although it's currently immediately available for move-in with some aesthetic, remodel needed. But that could be a $99,000 home. $65,000 is the price. $75,000 could be your potential overall price for, some refurb, etc., and it be a $99,000 product. That being said, the better strategy here, and why I have you here today, is the mobile mailbox money strategy. This client has bought this home, financed through us as a seller finance program, and is qualified with a 600 plus credit score, no past criminal, no open bankruptcies, no past evictions, and verifiable income. So they're qualified. Home's a quality home in a desirable area. The strategy being implemented here for mobile mailbox money is having a investor buy this note. So let's back up a little bit. $65,000 is the purchase price. They put 10% down payment. Their loan balance is $58,500. Your note acquisition, in other words, $58,500, right? Think back to the residential real estate purchase, right? Go back real quick. Residential real estate, $300,000. 20% down payment, $60,000. You may need $10,000, $20,000 in remodel, or you rent it out as is and get a less cash flow rental rate. You're still not cash flowing. For that same $60,000, alter your strategy to investing in a note that's already cash flowing, contracted, and qualified at a $58,000 $500 acquisition. That monthly payment is $908.31 for 10 years. Grab your calculator. I'll give you a sec. Grab out your calculator and do the math. $58,500 is the purchase price of the note. The buyer's note, the end user client who owns the home and has an obligation to the loan, you're the note buyer, of $58,500 is making 10-year payments at $908.31. Do the math. 908 times 31, which is the monthly payment, times 12, for 12 months a year, times 10 years. That's 120 payments at $908.31. Hopefully I said that right. Anyway, the total amount of payments received over the 10-year program for your original acquisition of $58,500 and 10 years of monthly payments, $908.31. Total payments received, $108,999.7 on a manufactured home of acquisition at $58,500. Do the math. 10 years, you were the bank. You didn't have to worry about management fees, maintenance costs, vacancy rates. As long as this individual repays their payment over time, which they don't have much of other choice, because if they were to go and rent across the street, it's the same payment. So their obligation to pay is that much more of a concern for them because they can't go anywhere for cheaper. $108,997 on a $58,500 original investment. That's a $50,000, just less than $49,000 and whatever on your original $58,000, being the bank, cash flowing passively in a manufactured home, locally originated note here in Maricopa County, Arizona. The cash flow is unmatched. Do the comparison side by side. $300,000 purchase prices right now at an 8% mortgage rate on a fix and flip loan. You're operating at a net negative when an alternative strategy right across the street, same area, for a manufactured home note, cash flowing as the bank, you can acquire a note for $58,500, cash flow payments in a 30-day program of $908.31, and receive over a 10-year period $108,997. Do the math. Unmatched payments. MobileMailBoxMoney.com. September 7th, Alden Guajardo. We're doing big things over here. We're here to make it happen. If you're at all interested, call me personally, 602-888-CASH, or view the available notes that we have at MobileMailBoxMoney.com. Wrap.